Hi, my name is Intan Shazrina binti Muhammad Fauzi. My metric number is 23 DRM24F 2001. Historical cost is an accounting concept that refers to a original purchase price of an asset at the time it was acquired. It represents the actual cost incurred to purchase, transfer, and install the asset without adjusting for change in market value over time. Key feature of historical cost is objective measurement. Objective measurement is based on actual transaction, making it a reliable and verifiable value. Second is unchanging. Unchanging remains fixed on the financial statements even if the asset market value increase or decrease. For example, if a company buy equipment for 50,000 ringgit Malaysia, the historical cost of the equipment is recorded as 50,000 ringgit Malaysia on the balance sheet, regardless of its current market value.
Hi, my name is Nona Shoda binti Muhammad Fakhruddin, and number metric 22 DRM 24F 2003. The accounting concept of produce is known as the conservative principle in precise accounting in financial reporting to ensure that assets and income are not overstated, while liabilities and expenses are not understated. 1. Avoid overstatement of profit or assets. Revenue or gains are recognized only when they are reasonably certain, not anticipated prematurely. Asset value conservatively, considering possible risk or depression. 2. Recognize liabilities and losses early. Expected expenses or losses are accounted for as soon as they are arising, even if they have not been realized yet. This approach ensures liabilities are not understated and financial risks are reflected accurately. For example, if a business expects a doubtful debt and amount owed by a customer that may not be paid, it would create a provision for the potential loss under the purchase contract, even if the debt has been officially declared as paid.
Hi guys, my name is Miss Haibah binti Abdullah. My number metric 23 DRM 24F 208. I will explain the following accounting concept followed by relevant example. Okay, the example is consistency concept. Okay, the principle requires its entity to use the same accounting method or executive time period that is with no change from year to year. Then, if a particular method is adopted in particular year and another method is adopted in the following year.
Assalamualaikum, my name is Muhammad Zafrul Iman bin Zainuddin. My metric number is 23DRM24F2009. Accounting matching concept. Accounting matching concept is required that expenses should be recorded in the same accounting period as the revenue. This accounting concept requires company to use the accurate basis of accounting. The important is to ensure that the profit or loss report for a specific period is accurate and fair. It also organized for account and not confusing.
Here is a simple explanation of invoice, purchases, and sales. First one is invoice. Invoice is a document issued by a seller to buyer listing the goods or service provided, the quantity, price, term of payments, and other transaction details. It acts as a formal request for payment. For example, a supplier sent an invoice to a business for delivering office supplies, specifying the total amount due. Next is purchases. Purchases refer to goods or service acquired by a business for its operation or resale. It is recorded as an expenses or inventory depending on the nature of the purchase. For example, a bakery buying flour and sugar to produce cakes would record this as a purchase. Third one is sales. Sales represent the revenue a business earned by selling goods or service to customers. It is a key source of income for most business. For example, a clothing store selling a jacket to a customer is considered a sale. In short, invoice, a billing document, purchases, acquiring goods or services. Sales, selling goods or services for revenue. That's all.
A cash bill is a document issued when a business transaction is conducted using cash as the payment method. While a mediated payment, the customer pays for goods or service in cash at the time of purchase. No credit or deferred payment is involved. Two accounting entries for cash transaction. For the seller business, debit cash account increases cash balance, credit sale revenue, recording the income. For the buyer customer, debit expense or asset account, depending on the nature of the purchase, credit cash account, decreasing cash balance.
Okay, I want to discuss about credit note and debit note. Okay, first about credit note. A credit note is issued by a seller to the buyer. It indicates that a certain amount has been credited to the buyer account. This could be due to returns goods, overbilling, and discount. Example, credit note showing a return of goods. Then what is debit note? Debit note is issued by a buyer to the seller. It indicates a request to debit seller account. Used when buyer returns goods were defective or incorrect, and short shipment. Debit note with mention of defective item. Also, example for credit note. For me, the scenario is the customer returns 2 out of 10 items due to damage. Credit note show original invoice number, item returns, and account credited. Also, for debit note, the scenario is buyer revise damaged product. Debit note can show reference to the invoice, item being returned, and request for debit. Both are used to keep accounting record accurate. So from example that I show you guys, we know the credit notes issue mostly from seller and debit note mostly from buyer. Also, the purpose from credit note is adjust or reduce the amount on owed
Official receipt.
by the buyer.
Official receipt is one of the formal documents used by a company to acknowledge
For debit
payment
note
received
purpose,
from a customer.
is
It
request
used in
or
cash
reduction
transaction and it
in the
normally
amount
issued by the
to
supplier to the
overchange
customer.
defective product or
Official receipt
other
record in the cash book because
discrepancies.
it involved in cash inflow.
For the last one, matching for accurate account. Goods credit and debit note should align to ensure correct adjustment for receivable and payable, maintaining accurate record for both buyer and seller. Then for debit note, both note need to reflect the same adjustment to keep accounting accurate.
MASB, Malaysian Accounting Standard Board. The
The function
MASB
of
is official
Malaysian
body in
Institute of
Malaysia
Accounting
that develop
MIA.
and issues accounting
Develop the
standard for
SGS,
companies.
the
Function
competency of
of MASB.
accountancy profession to stay
MASB
relevant to
ensures
business and market
financial
demand,
statements
and
are
then
consistent
natural
and comparable.
professional value
They
and
also make
ethic
it
of
easier
member
for
to uphold
Malaysian
a strong
companies to do
accountancy
business and
profession.
raise capital overseas.
Then that
It also
regulate
helps
and develop
stakeholders
the
such as
practice of the
investor,
accountancy
bank, and
profession
the government to
consistence
make an
with
informed
global
decision.
standard and best practice. Lastly, promote the value proposition of the accountancy profession and continuously uplift global regulation.